Hi, it's David here with Futures Trading. I want to say thank you to all of you who supported the last two videos here on YouTube. I know it was at least five of you that hit the like button. And thank you, Santiago, for commenting. And Yana, thank you for coming on board. And I thank you, Dimitri, for suggesting that she do consider this information. Thank you so much, my friend. I would love to see some of my other subscribers, if you will, hit the like button. If you had a good day, just say, "Hey, I had a good day today." Leave a comment. It's really important that we do that. And here's the thing: there's so many people that badmouth trading educators. I mean, don't want to support them at all, and I get that. I get it. You know, you may feel as if the information won't be what you would need to get you ahead, and you feel like you can take on this stuff on your own. I did that. I did that myself, so I get it. However, if there's free content offered to you by a trading educator and it's working for you, I guess that's the basis of it all. If it really works for you, why not comment? And so it's or hit the like button, even if you already know what he's going to cover or she's going to cover for that matter. If you already know what they're going to cover, still hit the like button, still hit, comment still, because it's no satisfying you at that point. If you don't want to purchase the education, but the person shares the information for you, to you for free, and you still won't support it, and who are you to do that? That's really selfish, bar none. It's really selfish. So to have 90, let's say at least 90 people, 'cause I know a few of you have just joined within the last two videos, to have over 90 people on the channel here, and I barely see two or three likes. It's showing a lot that you guys are really being selfish, and it shouldn't be that way. You should want to share your experience. If you're having a good day with the information since coming on board, just say, "Hey, I had a great day." It'll go a long way. It'll help the next trader. It really will. And because it's etiquette, and let's look at this word, and then we want to dive into this content. But I definitely celebrate the fact that the last couple videos, at least five of you liked it, and that's important. So thank you for doing so. But etiquette, okay, the customary, and you can go look at the the definition of this, because that's what I do. I read the dictionary because I like information. The customary code of polite behavior in society or among members of a particular profession or group. And so there's, of course, doctors that would support one another, lawyers that would support one another. You see them, I mean, commenting. They'll talk to one another with a level of respect. They would even suggest one another. If one, lawyer or doctor can't, take you on, they'll say, "Hey, I do know someone who will, that's in my same field." And so it's really interesting. And this is what makes for the difference between people that trade and a professional trader. Because a professional trader does what I do. We practice the etiquette, the code of behavior, the ethics that come with it. We're not gonna be competitive against one another. We're not gonna show a disdain for one another. That's what makes for professional trading. So when Dimitri comment, Yana, Santiago, Payman, when you guys take the time, and there's a few other of you who have said, "Hey, I found your channel. Thank you for making the information." I would love to see you guys keep commenting, because that's what makes you a professional. That's when you start growing with the profession itself. Okay. And so we want to be different with this material in essence of not just the chart, but taking on the responsibility of the ethics that goes along with it. So again, this is the definition for it. If you don't know it, if you ever want to change, because the world is full of selfish people, absolutely, bar none. And we just don't need any more of that. So I try to be what I want to see in the world. It's really important. God allows me to wake up every day and have the activity of my limbs and articulation of speech. And I am thankful for that. And so I'm not gonna I'm not gonna wake up and treat humanity, those that's around me, in a way that doesn't celebrate the fact that we're the same, that we deserve the same level of treatment, a level of civility, a level of respect. And so it's important to do that. That's all. It's important to do that. And so etiquette, just etiquette associated with this profession, just polite behavior. So if you would, to my subscribers, not you new guys, I know you just got here. I'm not gonna get on you. I'm not gonna get on you, but if you would, since you've joined and you like what you saw so far, moving forward, if you had a good day, just leave a comment. Had a good day. It can be just as simple as that. I promise you, I'll respond back. Thank you so much. And again, I celebrate the fact that you guys have stepped up just a bit for the last two videos. Now, Friday, if you took a look at that NQ, you can see that that mid fell right back into this bar. So you can already suspect that once that mid had got above this bar's high, that rotation could have came in, and it did. It wound up coming back in. So I hope this information is helping you guys. We're going to dive into some. Eh, it's going to be interesting, but we're going to dive into some of the ICT information that's online. Now, I'm in no competition with this fellow. I don't, and I said it in videos earlier on when I first came to the channel, that you can put any ICT, SMC, whatever concept, you can put that stuff up against what it is that I'm teaching, and it still will outperform it. And the only reason, because and it has nothing to do with competition, there's no winning trade that will take place that won't have what I'm teaching you in it. I promise you that. And we're going to take a look at the chart, and we're going to kind of look at some of the fair value gap stuff in relation to this information. And you'll see why I said, because I even said it in the video prior, you can go back. I don't think that his trading approach is smart. I don't think it's smart. Now, it's not to say it's not profitable. It should be, because it involves what I'm disclosing with you. And so when I started trading, let me say this: when I started trading, there was no ICT. I'm just that old. It was no ICT. The closest you got to turning points in the market was Sam Seaton. That's the closest you had got to it. Yeah, and I think Rob Hoffman was out there at the time, but there was no ICT. None whatsoever. So this stuff ain't is not. You'll see. ICT is late. His information is late. It's not to say it won't work. I think he's doing what he does, and again, I respect the fact that he's a trader. And I told, of course, in another video, I did say anybody that's trying to teach his stuff, shame on you, because that's his stuff. That's his approach to the market. So, you know, why everybody attaching their name to ICT and then trying to teach his information? If you are already a profitable trader, tell people what you did to become profitable. Tell people what you did, and adapting someone's methodology and trying to build your channel around it, to me, is just unprofessional behavior. It's no respect for what put you there. So if you became profitable, why go and teach his stuff as if it's your own? It's not. So I'm gonna teach you what I know that made for me to be the trader that I am. And it you'll see, it's really simple. It's not complicated, as I've been trying to show you guys for the last past at least 5 months. So we're going to look at his stuff on the chart. And again, no bad light on the fellow. I believe his stuff's supposed to work, and I'm going to tell you why, because you'll see it's supposed to work. But his stuff is the way he's approaching it is late. All right. The fair value gap stuff is late. All right. And I'm going to show you why. Now, let's get into that. Now, I tried to outline the chart based on my price pattern. So the price pattern that I released to you guys, the price action method pattern that I released to you guys, I've put little blue boxes where that was happening at. All right. So I want you to just consider what I'm telling you when I say his information is late. It's late. It's late. It's all about the price levels, okay, and how price respond. Okay, so you saw, price was wicking under here, and we're gonna look at some real time too. We are using that whole gap stuff. We're gonna do all that, but it's late. It's another bar in before you see the box show up. And we're gonna look at real time so you'll understand that. And then here you can see that this is a no close price level here. And so I tried to go through the chart and find as many examples as I could, and put blue boxes around it where there was no gap, where there wasn't any ICT gap, no box, and show you that the price patterns the price pattern that I'm showing you, it's important. You can see they vacuumed up beyond this bar, but yet it's closed back beneath that level. And so I tried to mark on the chart areas where, you know, my information that I'm showing you is there without the box. So you'll know that it has nothing to do with this gap. If anything, the gap is coming in late. It's coming in a whole nother bar late. And while when you learn the information in real time, you learn the information like this, and it's not late. Okay. This bar here, if you're new to the channel, I'm gonna do this. If you're new to the channel, those that's been following me for a while, you already know this content, but still hit the like button, still hit, still comment. This bar's high is below that mid. Okay. That's important. And we've been going over the reversal aspect of if this don't happen, the market will chop you. It absolutely will beat you up and possibly go the other way. And so his stuff is late because what he's wanting you to do, and this is just and no, again, no bad light on the fellow. I think okay, if he teach the stuff and of course you get good results, then go with it. I'm just telling you, I don't think the way he trade is smart. That's just me because I know it's late. The function of the market is important, and I've been trading function for so many years. Like I said, it was no ICT, none whatsoever. Been profitable long before ICT. Um, this is late. People are waiting until this bar. I should have did it a little lower, but we'll do it like this. People are waiting to see this box. Let's do this. They're waiting to see this. Okay, okay, and this is what's not professional about trading. I'm not looking for this market to come from up here back down here, and then I want to go back this way because there's absolutely no regard for what the market is doing when it's coming this way. It's no regard. You're anticipating that there's something that's going to happen here that should send it back out. And that probably may contribute to why people are failing, with his approach. And everybody ain't winning. Everybody ain't winning. There's a lot of stuff online that says that everybody is not winning with this stuff. All right. Now, there's people that can say, "Hey, well, I'm not able to get my trades to work, learning what I'm telling them too." I can't do that because I got other stuff up here. Um, it's all an application. How you applying it? How are you applying this information? It's important that you go with. You've seen me take trades in live videos. Matter of fact, I just did one recently. Let me show you where it's at, just in case you're viewing this and you don't know where it's at. It should be right here. I just did a video here, and I took losing trades in that too. So you're going to take losses. I mean, you're going to take losses. That's a part of trading. It's timing. That's all it is. It's just timing. But why get in when the market comes back? Why are you getting in it when it comes back? Why not be a part of it going? Why not be a part of it going? That's important because if it comes back, you don't know what these guys, have done from the price level that they're coming from back here, and trying to anticipate that they'll just turn around because this was a pivot and it had some gap here. Or here's some things that I've seen people talk about online. Uh, they want to say that it'll work when this happened, and then they come back some chalk and all. What are you talking about? And so it's supposed to be some gap here that you're supposed to go with. At least that's what I've gained from some of the content that I saw of his. Why not understand what's happening up here if you want to be someone that steps in front of the market and go the other way? Because it may not be a trend here. You know, you can know that this is coming by some of the information that I'm telling you about knowing when the trend would fail, because clearly this would be a trend. It would be, doing trend distance. If you watch the behavior of the price activity that I'm gonna show you even in this video, you can go ahead and be in up here, and that's why it's late. It's not professional trading. And so when you want to be in some gap up here, but you need the market to come back to it and go back down, how do you know that you're not being trapped and they're going to run you? And now you get a broader channel and the market just rips against you. How do you not know that? It's definitely if you're not paying attention and you're just trading some gap because of some choke, some whatever. It's just not professional trading, in my opinion. It's just my opinion. Yeah, if you don't like what I'm saying, you more than welcome to hit the thumbs down and leave a negative comment. It's up to you. I'm just sharing my opinion. That's all. And again, I'm an older fellow. Been doing this for so many years, so much so I'm trying to just teach you the function of the chart, so you don't have to be in late when this bar finished. And now you know that this box is here. Man, you can know that this box would show up pretty much when this mid of this bar travels away from that low. And we're going to go through the chart. Let's just do that. Let's do that. And then we're going to go into the real time. All right. So everywhere you see a blue box, everywhere you see a blue box is a place where there's no ICT box. All right. So now keep in mind his box, and I'll say it again, it's late because it requires 3 bars. Okay. That's 1, 2, and that's 3. I'm trying to get you in this trade on this bar before it closed. I want you in the trade before this bar closed. So you're actually trying to get net positive into this bar. So you want this bar to finish. And I can tell you why my approach. I can tell you why it works, but that's reserved for people that take training. I can tell you why it'll keep going. I absolutely can. It makes sense. It's not. Trust me. It's not what you think it is. It's simple. I'm not going to give you. I can even tell you his order blocks. I can tell you what makes sense when it comes to that. I heard a little bit about that too. I can tell you it's something simple going on with that too. Just look at the chart and see, can you figure it out? It's something simple that's going on with that. It's not all of what he's saying. It's not. But again, if that's how he interprets the chart, there's nothing wrong with that. Okay. And I just want to say that. I just personally, it's just me just having my opinion, and I'm just willing to share it publicly. I just don't think his approach to markets makes sense. And I think that he's complicating trading, and I want to rid you of that problem. I've taught you this information, trend distance. Let's go here. I taught you trend distance, and even gave you 3 turning points all within 40 minutes. Professionals can do that. All right. So 12 minutes, 8 minutes, and 18 minutes. Professionals can do that. If you've been doing it for many, many years, it's not complicated. I can assure you, it's not. And again, I'm a self-taught trader, so I gave you the turning points. That's the chart scale, the ranges, the statics. Here's the price action method, which is in any winning trade. I promise you, if you win, it's this. If you win, it's this. Here's the trend. So you got to know that markets are cyclical. They do the same thing over and over and over again. So that's late. Now let's go and start looking at some of this information. Wherever you see, a blue box, that's the price pattern with that I'm showing you, the NC, and there's the level. There's no box here, but you still get that movement. All right. So wherever you see the blue box, that's the price pattern. Okay, that's the price pattern, and there's no box. Even in here, I even tried to mark stuff like this too. And and you had the NC from up here. I should have. Well, you can see it now. See, there's no box in this. Okay, you see how prices is going under this no close bar and coming back up. Even here, little tight back and forth movement. Price is going under that price, that this bar right here is going under that bar and not closing and coming back up, getting real close to the back of this bar, turning around. It's not what you think it is. This is a no close level. They came up here for about 4 minutes and just didn't want to close above here, even though they took out the high. They just didn't want to close there. So about 4 bars here, they just wicked out, wicked out, wicked out, wicked out. Okay. So I tried to highlight where there's no box. All right. So here's another one of the price patterns here. No close level here. They take off. Now remember, you're trying to get in this trade on this bar and take the ride. And so now you can see that the price pattern. Now you can look at all of where his box is at. My price pattern is there. You can see the colored bar before the box, the colored bar before the box, the colored bar before the box. And so of course, I want you to see what I'm teaching you. Here's another scenario up here. There's no box. Here's the no close. Here's the no close. They hit it. They hit it. They hit it. Even this one is a no close level because it's outside. It went outside the high of this one, but the mid is below that low. So even outside bars, here you go. The mid here is below this bar's low. This becomes the hard stop and the no close. They shot up above it, and they came back down. This one, of course, shot up above both price levels. This is the no close. This is the no close, and then they turned around. Now here come your box on this bar down here. You can know that this is the hard stop. You can tell by the behavior here that this is the no close bar. And then you get another one. You can start seeing that they're responding to that. So why are we waiting till the price come way back up here to test this box and then take the drive down? Or for those that want to buy, of course, the box here, that's totally up to you. You're ignoring the price pattern that's telling you they're coming. And so that's not going to work. Now here, same thing, no close level. They kicked the stop, but they managed to run back down and not close above this price level, not close above this price level. And of course, below, they managed to run through. But there's the price pattern with no box. There's no box there. Same thing here. No box. No box. They stalled out before they kicked that stop. Okay. They kicked the stop. There was no box there. The no close from above. Look how long it held price for at least one, two, three, four, five candles. They didn't want to, close above that price level, but then they finally gave it to you. So everywhere, and I'm not gonna run through all of the scenarios, but everywhere that you see the blue box, that's the price pattern. Okay. Now, everywhere you see his box is associated with the price pattern. So it's not. I'm gonna just scroll through the chart, and you can pause the video and go back. You can do it. I'm not going to dive into all of it right now, but you can see where everywhere that there is some gap. So which gap are you taking? And this is the other part I want to say to you. This is the other part I want to say to you. How many channels give complete context for any market or time frame? Trend direction in real time and the distance that the trend will go. That's duration. Which bar, it's a bar now, will prove real participation for a hard stop, not 3 bars. This is important. Where to put your stop. You have to know where to put your stop, and it shouldn't take 3 bars. It then ran up the board on you, and now all of a sudden you're persuaded because some fellow online told you, hey, once you see this, I guess this gap between 2 bars, hey man, now that's a good area to go in that direction. You can actually be a part of that information on the way, and I want to make you aware of it. I want to take the time to show you. I don't like what's happening in this field. I definitely don't like it. And since being online, I'm starting not to like it anymore. Even the more so, I don't like it because there's a lot of selfish people online that don't even want to take the time to hit the like button. Just comment. I had more support when I had my company online, believe it or not. It was a different time, just a different time. But taking the time to hit the like button and saying, "Hey, thank you," it would help other traders. Trust me, it would because there's so many traders that's being taken advantage of by stuff that just doesn't make sense. Which box do you go with as this is driving against you? Do you know that that's a trend that's trying to form on you? Do you know how long that could possibly last? That's important. This stuff is important. So when you have full context, knowing what's a trend, knowing that your box is off to your left, if it's on its way up, I don't know if I did any more highlighting on the chart here. Yeah, I did. Okay, so we got a couple more here. Okay, so here's the NC, no close level. You can see they hit that several times. No box, no box, no box, no box, no box. So it's important to understand function, to understand what makes for price movement. Why price is moving down the board. Oftentimes this is a no box scenario right in here. That's a no box. See, there's the level. Here's the no close bar. Several hits of that level. So it's important to understand from a professional standpoint. Here's a no box scenario here, no box scenario here. Why are you waiting for the box? That's my main point of showing you this. No box here. Really want you to know that no box down in this area here, no box. You need to understand why price moved the way it moves, and I want to make you aware of it. I want to make you aware of it. It's very simple. No box right here, no box right here. This is a no close level up here, hard stop. Same thing here, no box here, no close level, no box here. Remember this NC is connected to these 2 bars. That's what's important right here. No close. This is a no close level. All right. So if you look over here, this is a no close level. There's no box here. Same here. All right. So we done that. All right. So now we did that. Now let's look at it in real time. We're going to use Bitcoin because I know the market is closed, and so the we're gonna see can we get this information to show up in real time. Let's reload this chart. I want to make sure it's actually doing what it's supposed to do. And then we're going to do that fractal alignment. We're going to try to look at multi-time frames. I hope Bitcoin don't start stalling out, but I want you to see the box effect in real time. I want you to see it. And so that way, if you're new to trading, and you know nothing of trading, I want you to know that you may run across a lot of that ICT stuff online. It's not to say his information don't work. I'm not bad mouthing the fellow. That's not what I'm doing. I'm just giving my opinion of what I think about his stuff. The way he's trying to get you to interact with the information. I think he's, for one, it's dense. The approach that he's trying to explain it to me is too dense. It shouldn't even be that, because it's not that. It's just a simple function. At least this is my opinion. It's not that to interpret the information that's in front of you. How many of you can recall all of the content that he's disclosing to you in the amount of time? Now, remember, science supports this. There's only a limited amount of focusing that we can do. I'm not even going to go into that, but you have to be able to simplify what it is that you're seeing when you look on the chart. And there's a function that's there, and it's all about mitigating risk. So why would I take on another extra bar to know that the market will go in that direction? Why would I trade against the direction in which that it's moving, and having no regard for the fact that it's moving? It's actually proving to me that it's going that way. And I'm gonna just disregard that information and just say, hey, because this fellow told me that this box is over here, I'm going with it. So that's not what I want for you guys. Now let's get into the now that order block stuff. See if you can take note. I may cover that before the end of December. I may cover that and tell you something simple about that. It's something very simple about that. It's been on the chart the whole time. Been on the chart the whole time. It's not what you think. It's very simple. I may do that, but again, it's professionals know stuff, and I told you guys this before. Professionals can trade in a way that will absolutely revolutionize your trading. Like, you would be shocked and amazed how easy it is, because professionals been trading for years. There's old traders, older than myself. And even before electronic trading, you had professional traders. So it's not some gap in the bars. That's really not it. And so the mid of the bar, let's go here. The mid of the bar here, if it's inside of this bar, so this is the one that's going up and down. All right. So this bar right here, that black floater is the mid. This bar is trading up and down, up and down, up and down. If this floater will not clear this bar's high, you're going to get overlap. Okay. And that's all it is. Okay. Now that floater, I'm glad it's happening. Thank you. Is below that low. This should be the hard stop. This should be the no close level. You can go messing with these boxes if you want to. Totally up to you. It's not to say it won't work. I mean, it could. Let's see what we got as far as the trend. Do we have a trend here? Do they want to make a trend down? Now, we're going to talk about a couple of things too while we're here, because it's all about the tips of how to know when a trend would fail. 1, 2, 3, 4. And I think we just came in on 4. So they might can turn it around. But angulation. This is sharp. This is not. So it might turn around. So maybe one of these boxes, one of these boxes might turn them around. Maybe. I don't know. Let's see. But right now, it's not suggesting that. If anything, it's doing the opposite. We're getting rejections of the no close. They're not closing above this price, and they're falling away from it. So let's see. But angulation, they had some strength up here. Not so much. Let's see what they do. Let's see what they do. Let's see if they'll turn it around. You may get a box here. Okay, you may get yep, there go a box. You can be in it before the box show up. Now, lucky for you, they're back into this bar. They're back into it, which again, if the mid now to go up, it would be this, because that's the go down scenario. Let's put it on this side. If the mid before the bar closes, okay, if this mid on this bar refuse to remain outside that low. Let's say the mid came back into this bar, you'll get this. So if you're trying to time it, this is one way of doing it. There's so many things I can tell you about timing. I promise you. But this is just one way to kind of time your entry. So those failed breakouts, if you will, because there's only 3 types of traders, but those failed breakouts, if you want, you can step on it and go back the other way if you can gauge whether or not this mid will be back into that low. If you gauge the price and see how it's trading, If it rips and falls out of that, that midpoint falls away from this bar, you can still go that way. Just know you may get met with some selling up there. That's all. That's all. You may get a fight on your hands. That's all. So 38 seconds here, 36 seconds. Then we're going to look at the higher time frames. I just wanted to let you see a box form, and then we're going to look at the higher time frames there and kind of put it all together. We're going to do the multi time frames with this information. Then we're going to add it to that section. So the midpoint, I don't know what's going on with this chart sometimes. So we're working on the next bar. Let's see. Let me refresh this. We're going to be doing some funny stuff on the weekend. Let's see. This midpoint still inside this bar. Let's see. I hate when they slow this stuff down. That's why I like the NQ, but it's the weekend. I got some free time. So yeah, even a box popped up there. Even the box popped up there. The box had just come in. It don't matter. The box had just come in. As long as there's some difference in the price levels, from this high to that low, that bar is low. It's like ignoring the one in between. You'll get the box. But that's important to know if that mid could leave, because it's all about tug of war, people. That's all it is. You're fighting. Every candle is a fight between buyers and sellers, and you only got passive and aggressive people in the market. So if you can get the majority of the candle to fall beneath, the majority is more than half. Go look at the definition. It's really simple. It's really simple. I don't have a whole lot of convoluted rhetoric to tell you about price. It's not necessary. It's just not necessary. Majority. Go look at the definition majority. I'm not going to pull it up. Just go look at the definition, and it means more than half. Anything that's more than half, okay, it's majority. So if you get the majority favoring, okay, just took place, if they're favoring that direction is not going to be regarded anymore, it should show up on the chart. And that's the simplest way I can describe it to you. Take one word called majority and just go look at your chart. And Dimitri and Payment, you guys, and of course anyone I've traded, you guys know that it's important to read the market. If you're going to read it like literature. And there's ways that you read literature. There's ways, as I make people aware of that. There's ways that you read the market. And it's simple. It's not complicated. Take the word majority. Majority is more than half. And so if more than half, the sum of that bar is operating outside the range of the prior, you can, in some degree, just kind of deduce that there's a chance they're going to go some more in that direction. How long would they stay in there? It all depends on when the majority will change that direction. Just depends on them. And so I try to make you aware of this information. And so we're doing this again. No close. Let's see. They just taking their time. It's almost not worth going to the higher time frames, but we're going to go take a look before I get off here. Got a lot of boxes and green bars back here. I like the green bar part because it don't require another bar. Like we don't need to up our risk having some other bar come in and then waiting to see if it comes back. The price don't have to come back. I done shown you so many occasions where you get trend and trend distance, and it doesn't pull back to the center of the trend. It'll just run on to the trend distance. And so price don't have to lean over to let you in to pick it up from some box. It don't have to do that, some gap, if you will, because I know that's a thing, fair value gap. So it don't have to lean back into some fair value gap to allow you to get in it and participate in that direction. If anything, anyone that's trying to, pick up, the market from these gaps, these fair value gaps, they're getting their stop ran. They're constantly, this is stop run, stop run. Is this going to be a stop run too? Let's see. Let's give it a second to see if they'll get back up. I told you that angulation. We'll just do angulation here. It's a little bit this way. Now, remember, I told you the sooner that price pattern shows up, the better it can go. If the sooner that it shows up, it's not showing up. It's not showing up. Not there. The sooner that it can show up, the chances of it going in your favor is heightened. I mean, it's there for you. That's important for it to show up. The sooner it show up, the better your chances of it running in your favor. All right. So here's some more boxes that's getting ready to come under some pressure here. Now let's see if they can get beneath this low. This mid is below this bar's low. All right, so that creates the no close. This is the hard stop. And you can say, if you want, you can say, hey, it was because of this box. This candle fell out of that. We've been watching it at least from up here. We know they're up here and they're forcing it down. It don't have to be this box. It's not this box. It's up here. It's happening from here. It's happening from this price level. It's You'll be surprised if you just look at the information for what it's actually telling you. A box should show up here if they can keep this mid below that low. A box is going to show up here from here to here. This is the no close level. But you should be in the trade when this mid fell beneath that low. So you're already net positive. That's why I say his stuff is late. You're already net positive here. Okay, there's your box. But you knew that from here when the mid fell beneath this low, that's you being net positive and you're still growing. You're not waiting for price to come back to this box and then try to go down. As you can see, it's not doing that. It's not willing to. It's still traveling. It's not coming back. Now let's take a look at the higher time frame because you know that should create another box. It should. Let's take a look at this information. This is that same Bitcoin information. We have the higher time frame here. We have the hourly, the 15-minute, the 5-minute, and the 1 minute. Now we're going to apply that same marker, that midpoint. Here's the midpoint here. Okay. And again, no bad light on the fellow. His stuff works. Now I'm not going to say it don't work. It does. You have people online equally saying that it works. It does. It should work. What I'm promoting to you is this, that his approach to trading it is not, to me, it's just not smart. I'm not going to ignore the market and its movement. It's coming this way. I'm going to have no regard for it coming this way to go back the other way. I'm not doing that. That's absolutely crazy. If anything, why don't I go with the market? Why don't I trade with the direction of the market? This should create some box. Now, this is a 5-minute. You're going to wait until the market come back up here to this box. Why do that? The mid of this bar, I don't have a mid marker up here, but you get it. The mid of the bar was below this bar's low. Hard stop here. Let the bar finish trading. This is a no close level. Same way with this up here. When this bar, because you know that this bar's mid was not above this high, you do know that. If it's not above this high, you flip the price pattern upside down on its head. This can start chopping. It can start going sideways. Well, lucky, for anybody that wanted to short, knowing what I, would tell you, just take the short. The minute you see this bar's mid falling beneath this low, take the short, stop right there, and you ride it down. What if it didn't want to come back and turn away? Or what if it comes back and want to blow it? Good for you if it comes back and it blow it, because then you're net positive. Well, you would have been net positive a little bit. Let's say it went down and then came back up, and you would have lost this much. It's okay. It's okay. I just showed you the chart with all the boxes on it, with all the boxes. But you know that you could get in before the box, so you would get this back. Just go with the trend. Say, okay, that's fine. Turn the position around and start going with the scenario that I'm proving to you, because you can get your money back. There's a box that's going. Well, it should be a box. I don't have it plotted on the chart. I don't have the indicators on these charts. I don't. I just wanted to show it to you on that chart. I will show it to you though. Here, let me turn it to a 5-minute. I'm gonna turn this into a 5-minute so those that uh know the information already, they will be aware. All right, so here's a 5-minute chart. I just flipped it to a 5-minute chart. I want you to see the box show up. Let's let you see that box show up, because the box is going to come in the next 2 minutes. 2 minutes. Let me just slide this over here just like this a little bit. Oh, so you still get your 15-minute, your 5-minute. We'll take a look at that hourly in a second. But here, so the midpoint here on this 15-minute is below this low. Now clearly, this midpoint was, below that low the moment they started going under it. You could have been in, stop here, net positive before, it got all the way down here. There's no need to trade the box, in my opinion. And now this is just me rendering my opinion of how I've been trading markets for many years. Okay. There's no need to play markets in a way that can just up your risk. You're risking that it's a chance that it won't work, because the further that it travels away, you have to think about it like this. if it managed to come back, that way. It depends on how many bars they're printing on the way back. They may be building the sentiment to trend in the opposite direction. And so if you commit to uh just the box concept, some box, is here, and I trade the box. Here's another bar. Mid is falling beneath this low. Don't buy this pivot. I know people, they'll want to buy this pivot. Don't buy this pivot. You see that the initiative, the majority, more than half, because remember, it's a fight. It's just a fight on the bar. It's a fight. And if you see that the majority is winning, okay, because they fought on this bar. And if you think about tug of war, whenever you're playing tug of war and you're pulling anybody, if you're old enough, you can play the game of tug of war. Everything on electronic when I was coming up. So when you ever played a game of tug of war, you're pulling someone, okay, you pull them hard enough, the polarity starts to work for you, where the force is behind them, and it's no longer, working against you. All right. So it begins to push them. The force is physics. It begins to push them forward versus, you struggling to get them, to come forward, come towards you. At first you may, because it's a back and forth thing, and you get the force and you have to fight against it, and then eventually the force is no longer, working for them. Is going to actually work against them, and force them to you. And next thing you know, you're able to pull them closer and closer. And so the same thing, to make things simple, the same thing is happening with the chart. It's just simple. It's not complicated. And so in 11 seconds, we're going to see this box pop up. I wanted them to do some overlapping too, but I wanted to mix in that fair value gap information in here, because I know online it has so much of that going on. So there's your box. All right, so there's your box. All right, so you would have already known to be a part of that situation on the way down. But I wanted to mix that in here too, because I know online has a lot of that. And if you guys are stopping by the channel and you're trying to learn from me, if you want to learn the information, I want you to know why you can trust the content, because it's going to show up on any winning trade. That's number one. If you're going to win, I can assure you that this is a part of it. And so it doesn't matter what oscillator you're using. It doesn't matter, what kind of trend lines you're drawing. It doesn't matter if you're using some kind of support and resistance tools, Fibonacci pivot points. You can use whatever you want, people, whatever you want. It's not going to change the function of the chart. I'm concerned about the origin of how things work. That's how my mind is. I concern myself with the origin of what makes a thing perform, because everything that we do is a function to it. It's thought, action, habit, character, destiny. So there's a function to even how we behave as people. And so the market has a function too. There's a place where it starts, and it's attached to a end. It's attached to inevitability. There's an outcome that will absolutely happen, but you got to get an understanding of where is its origin coming from? Where is it coming from? Where is it that it begins? And so it begins on a very simple level of back and forth, up and down, ebbs and flows. It's not all of this stuff that's being echoed online. A lot of jargon being put into this. It's not that. It's really simple. It's buying and selling. And what's sad is that we perform these same interactions day to day. Buying and selling. If you get gas or pay your bills, you're doing the same thing. It's just happening on the chart. It's just happening on the chart. It's just a little bit different here. It's happening on the chart. All right. So I hope that this has been somewhat informative. I don't want to hold you any longer, but I did wanted to touch on the ICT fair value gap information. And again, I have nothing but respect for the individual. He's someone that's, of course, an educator, so I respect him for his approach. I just don't think it's smart, and that's just my opinion. I'm not saying that his stuff won't win. I showed you on the chart, and I'll show you again that it should win. You should be winning. I just think the way that you interact with it could cause you to lose. So wherever my green bar is showing up at, remember the setup that I'm showing you, it's not requiring that third bar. And that's why I don't think it's smart. So I want to make it clear. I am not in no way saying that, don't trust what he's teaching. Oh, absolutely. You can trust it for as much as it makes sense. And to me, counter trending the market don't make sense. Why not just go with the trend? Why not take the trending money? Why are you fighting the majority? Majority is more than half. So don't fight that. Go with the trend, and then just understand when the trend ends and then go the other way. That's all. And I think a lot of people online, at least some, I'll say some of his minions, everybody that's online got ICT attached to their name, are trying to trade his content and don't even understand the function. And even he himself, I'm sure he's not going to be able to explain it to you the way I'm explaining it to you. So that's my time here. I wish you all the best with your trading. And again, if you need anything more, you're more than welcome to, of course, give me a call and we can talk about it from there. All right. So I wish you all the best with your trading. Take care.